All right, Bulls and Bears back with another dose. You're watching Bull Boom Bear Bust. My name is JJ, and let's go ahead and get right into it. Today is the end of the Bank Term Funding Program, and as I told you, and as I laid out for you many times over the past few weeks, there would not be a bank collapse today, even though this is the end of the Bank Term Funding Program. Why? Because just because new loans are no longer being given to the banks doesn't mean the banks have to pay back all the loans that were already given to them. And you still have the discount window from the central bank that's going to be there as the buyer and lender of last resort for these banks. So there were a lot of other people out there saying this is doomsday, this is the end, this is the day of the collapse. And I don't know if I was the only channel, but I think I was the only channel that of all the channels that I keep up with, I'm the only channel, and I'm sure there's probably hundreds of channels out there that I don't have time to watch all the other channels. But I'm the only one that I know of that said this is a nothing burger. Nothing's going to happen today. Now, it doesn't mean that it's going to be a nothing burger into the future. This could actually come back to haunt the banks very, very soon if another rescue program is not implemented, right? And that's a big if. Nobody knows if or when, what other rescue programs are going to be introduced. But we do know, as of today, the magnitude of the bank rescue programs exceeds all of the rescue programs and liquidity injections and bailouts from 2007, 2008, 2009. Actually, they didn't begin until late 2008. But whatever it is, whatever the total was from that era, is smaller than it is over the past 1 to 2 years here to date. So the financial crisis is worse. Why haven't you seen a collapse like you did in 2008? Well, that's because the powers that be, the central banks, they got out in front of this. They got out in front of it. The banks did not have to wait to see if the rescue was going to be there because it was introduced and announced right at the beginning of the bank failures that we saw in 2023. All right, so it's a whole different ballgame. If they would not have been there, you might have witnessed a collapse, a deflationary housing bubble bust. All right, now let's kind of shift gears a little bit here. And I want to talk about preparation, financial preparation, preparing for the risk that's in front of us here this year in 2024. There's a lot of balls up in the air right now for the policymakers, for the central bank, for the deciders, the ones that decide which banks fail, which banks get rescued. A lot of balls up in the air. So we got the expiration of this program. We have huge unrealized losses with commercial real estate at the banks. In fact, let's bring up a chart here real quick. I want you guys to see this. And this is as of the fourth quarter. And this just was put out here recently here out of Wolf Street. And take a look to the far right here, all the way up to the end of 2023. And compare this to go to the left here where my cursor is, 2009, 10, 11 financial crisis era. And you see we're in much, much deeper waters than we were back then. Even now, even not seeing the results of what's going to happen with this, even now, the amount of money thrown at this problem has way surpassed the financial crisis rescue programs and bailouts, right? So a lot of risk on the table here. They could try to keep this thing propped up. Again, buyer and lender of last resort. They could keep these balls juggled in the air. If they drop something, if something disrupts the mechanism behind this, it could be a lot of things, a lot of black swans that come out and disrupt it too. We have a lot of risks that we talked about here many times, all the different possibilities. At the end of the day, it doesn't matter which thing ends up being the disruptor. The thing that does matter is that you're ready for it, right? So have emergency expenses, goods out of the system, food, water, essential items, emergency goods out of the system, money out of the banks, items you can barter with. I know that sounds extreme. That sounds like a prepper thing to say, but I think that's the type of risk that we're seeing out there in the banking system. Remember, when the banking system goes down, if and when, I think it's more of when, not if, but when it goes down, you could say if, but I think it's a when. When it goes down, you only have a couple days before shelves are cleaned out of the stores, right? When the transactions are no longer able to allow people to buy things. Remember, most people buy things on credit now. Most people can't even buy groceries without swiping a credit card, right? It's no longer just a convenience thing. it's a must thing. It used to be, oh, I have the cash. Most people, anyway, had the cash to buy groceries, fix their vehicle with a repair, um, this and that, right? They had the cash, but a credit card was more convenient. So most people would just pay cash and not have to use their card. Then it started becoming, okay, I'm going to use my card and then just pay it off because I have the cash. I'm just going to use the card. It's more convenient. Plus, I get points, maybe airline points on the credit card. So I'll still swipe the card even though I have the cash and just pay it off in full at the end of the month and not pay any interest. Folks, we're way beyond that. Now, most people are not paying off their cards in full each month, and you're seeing the debt levels explode higher. And this is a ticking time bomb, folks. So now we're at the point where it's not a convenience thing, it's a must thing. People must use their credit card. So you only have a few days after the system goes down before the shelves are cleaned out, right? So just have some canned goods at home. I haven't spoken like this in a while. The last time I remember speaking like this was in 2019. And 2020, of course, we know what happened. It did not end up being a food shortage situation for the most part. There were pockets of shortages and empty shelves. Remember the toilet paper scare, all that stuff. That ended up not being a life-threatening situation. Um, could it be the same this time? Possibly and hopefully. But the risks are a lot bigger now than what I saw back in 2019 and what rolled around in 2020. Global conflicts, the entire grid going down. We have countries hostile to the U.S. looking to take down our grid. And you can argue who's behind it, that it's not other countries, that it's domestic actors, whatever way, it doesn't matter. Whatever the cause is, doesn't matter. The bottom line is you need to be prepared, have barterable goods out of the system, things that you can trade, things that you can get survival goods, trading with people around you in your neighborhood, even silver. I think after a few weeks, paper money is not going to be that useful. I think physical silver might be a huge asset, and you might see the value of that explode if something big happens in the banking system. Again, I'm not saying this is going to happen, but I'm saying be ready, right? A lot of drunk drivers on the road. I think I used this analogy a few days ago. A lot of drunk drivers on the road. You're out after 2 a.m. The bars and the clubs just closed, and you want to be very, very careful and be ready. Well, let's move on to some other topics here real quick. Take a look at this. How wild is this? First, we were told, and this goes back a couple years, inflation was transitory, meaning temporary. Inflation never came back down. Then we were told inflation is slowing, right? Slowing. That was supposed to be positive. The markets jumped up on that news. The Fed even recently talked about cutting rates, or they talked about 4 rate cuts this year in 2024 because inflation has slowed. Now, all that's gone. Inflation expected to remain elevated. So they went from temporary inflation to now we're just stuck. We're just stuck with inflation, right? So they finally are admitting what you and I knew here all along, right? The fundamentals did not show us that inflation was going to be significantly lower. In fact, it was far from it, and not even close to having overall deflation, meaning a lower cost of living. When I say deflation, I'm not just talking about the markets, I'm talking about the cost of living, right? What we need is overall deflation, meaning a lower cost of living. It's not happening. You see a couple spots. Electric vehicles dropped a lot, over 30%, but that's just a very small segment of everything out there that people are consuming. Food, energy, rents still elevated, right? Credit cards punishing household budgets right now. Credit cards with the 20+% interest rate. And back to what we talked about earlier, most people not paying off their credit card. That's why you're seeing debt levels explode at levels at a pace that we haven't seen ever. It's the fastest all-time increase in debt, household debt, national debt, you name it. It's all exploding at unprecedented levels, right? So big things to come here. Keep an eye on your preparations. I'm actually leaning more towards the preparation thing than I am in investing. I'm still investing, but I'm being very cautious about my investments right now. Cashing out, taking some gains and some investments that took big increases here recently. I'm sure you know what I'm talking about. Everybody, we're going to wrap this up here. What do you think about all this? Let me know what you think down in comments. And we'll talk to everybody very soon. Keep stacking. Bye for now. Peace.